Good morning. You're watching a home broadcast of Businessworld Live. I'm Dani Laurel. It's 10:30 a.m. this Monday morning in Manila. We are about 1 hour into the first trading day of the week. Let's kick off with our top story. At least two POGOs have now exited the Philippines, with more expected to leave. That's amid tax issues with the government. PAGCOR chairperson and CEO Andrea Domingo confirmed that Macau-based casino operator Sun City Group has ceased POGO operations. Now, aside from Sun City, Don Tence's Asian Solutions has also asked PAGCOR to officially cancel its license. PAGCOR Vice President for Offshore Gaming and License, Jose Tria Jr., said POGOs are leaving the Philippines. That's largely due to tax rules from the BIR, including issues on franchise tax. He says POGOs may also have been hurting because of overhead costs despite an ongoing ban on gambling activities amid the health crisis. Tria says 13 firms have stopped operations so far. Finance Assistant Secretary Tony Lambino earlier said the BIR faced hurdles in collecting the 5% franchise tax from licensed POGOs based overseas. These POGOs have stood firm that they are not mandated to pay the franchise tax because they are not based in the Philippines. Both the BIR and the DOF maintain that the tax, which is on top of the 2% franchise fee imposed by PAGCOR, should be paid by the POGOs. PAGCOR says they are now, quote, working on ways to help POGOs resume operations, but Tria says POGOs may bring the franchise tax issues to the courts for clarification. Now, on to another story on the economic front. More agencies are painting a bleak picture for the local economy this year. S&P forecasts the local GDP to shrink by 3% this 2020. That's due mainly to what it described as severity of the lockdowns. Despite this, BSP Governor Ben Diokno says this forecast should be seen in a positive light, noting that this was lower than the contraction of the estimates earlier given by the ADB and the IMF. Now, for its part, Singapore-based DBS Bank sees local GDP to slump by 2.5% to 4% amid the rising COVID-19 cases. Now, as of June 28 Sunday, the country has logged over 35,000 infections. The entire island of Luzon had been placed under an enhanced community quarantine in the middle of March, prompting the closure of business establishments and the suspension of public transport. Restrictions began to ease in mid-May when some businesses were allowed to resume, but only on limited capacities. Metro Manila remains under a general community quarantine, while Cebu City was reverted to an ECQ scheme. Okay, guys, bear with me as I open my terminal with you guys. We're having a bit of technical difficulties this morning, but you can actually see on your screens here just the major part of the world news right now, which is that the worldwide cases of COVID-19 have now breached 10 million cases, and we've actually had fatalities linked to the virus exceeding 500,000 people. So again, this is a big number, and global stocks are starting the week with declines on the back of this bad news. So I have to say we're kicking off the trading week on the back foot. The World Health Organization has also reported the most infections they've seen in a single day. So all indicators are pointing to the fact, and you can see that on the charts here, that the pandemic is really far from over. They have noted, and this from a Bloomberg analysis, that it took 4 months before the city in Wuhan actually when this pathogen surfaced in the city of Wuhan. It actually took 4 months for that to reach 1 million infections, but it is now 1 million additional cases every week. That's the pace that we are seeing right now. And in fact, analysts are saying the true number is likely to be higher given the difficulty we've been seeing in tracking infections. Over the weekend, WHO Director General Tedros Adhanom Ghebreyesus warned that the pandemic has entered a new and dangerous phase, and some health officials are predicting 1 million fatalities may not be too far off. So a lot of issues here. There's also been a resurgence in the US. I'm going to check in on the markets with you guys, especially globally, because you can see on my terminal here how the Dow Jones has slipped by 2.8%. This was on Friday's trade. The S&P 500 as well, and the Nasdaq sustaining losses of 2.5%. And you can see that Asia Pacific has not been spared. All of this bloodshed is crossing over the continents, and you can see that the Japan indices have opened in the red as well, the Hang Seng as well. You've got Chinese markets reopening today after a 2-day holiday last week. So most of the stocks slipping. And I'm going to show you our own local bourse, definitely not spared from the sell-off. You can see us closing in on 6,000 levels this morning. That is down a hefty 2.4%. So really mirroring Wall Street there. And this, of course, comes after on the heels of Friday, where we actually saw a bit of a rally. We were up by 1.2%. However, through a weekly basis, we were actually down by 2%. We had 3 out of 5 trading days in the red, and we also had a thinner amount of trades last week. So value turnover slimming by 30%. We had an average of 6.7 billion. Also, another worrying issue here, net foreign selling rising 13% last week to an average of 1.15 billion per day that we were losing. And Friday brought us to 6 straight days of net foreign selling. Now, Chris Mangon of AAA Equities is saying the same thing. This edginess in the markets is coming not just from global worries, but also particularly in our own domestic front. You've got Cebu City, the second largest, most important city in the country, having a news of an outbreak. He said that this is raising concerns among investors on a second round of a quarantine restriction. You've got Phil Stocks' Japheth Tantiangco saying the bearish sentiment is now building up. But Chris Mangon is saying, let's stay hopeful. We've still got 2 trading days until the end of June, and we might actually be seeing a rally here. And if that happens, we will see 3 months of consecutive gains in the index. But he does say watch out for second quarter earnings, which most are expecting to be reflecting huge declines. So just to point out here that, of course, this rally that we saw on Friday came about after the central bank had actually cut our rates by 50 basis points. That was a surprise to most analysts there. You actually only had 1 out of 22 economists surveyed by Bloomberg predicting that. But ahead of that rally, we actually saw the Philippine stocks falling by the most in Asia. Now, I just want to take a quick peek at our banking sector here, because these are the ones, of course, very clearly linked to that BSP cut, and you can see it actually slumping a touch here after having rallied the whole of Friday amid that decision. You can see the financials down by 2.3%. East West Bank suffering the most, down by 3.9%, together with our biggest lender, BDO. So no one is actually in the green right now. And I do want to check on the property space. We had reported this other issue in the banner in terms of POGOs exiting, them unwilling to pay additional taxes here. And also properties are in the red this morning. Not too surprising here, especially since you've got the rest of the bourse in the red. You can see Robinson's Land and Mega World suffering the most here. One bright spot, actually, Santa Lucia is up by 6%. I also want to take a very quick check at the local currency here, the peso. It was actually little changed after that surprise rate cut. Analysts have said that most central banks have been lowering anyway, so this was not much of a surprise. And you can actually see us gaining quite heftily here. We've broken through the 50 levels. We're trading at 49.845. So this is actually good news for our local currency. And finally, just one stock to be watching out today, because this is big news. This is First Gen. It's, of course, our biggest renewable energy company here, and they have just gotten a new investor. So this is KKR. It's a private equity firm acquiring 11.9% stake in First Gen for $192 million. So that's 427 million shares that they've tendered for 22 pesos and 50 centavos each. And you can actually see the share price of First Gen at 22.60. So closing in on that amount. This is KKR's first infrastructure investment in the Philippines. It's taking its investment to over $1 billion of equity in this market. Very interestingly, First Gen had opened in the red together with the rest of the local bourse. I checked it just a few minutes ago. It was down 1%. It's now reversed those losses to a gains. Market suggesting this new news of a capital injection by KKR that's up by 0.4%, bucking the sell-off, trading at 22 pesos and 60 centavos. So more on markets later on in the broadcast with Regina Capital's Alvin Limlingan. Moving on to other stories we are watching this Monday. Collection of additional oil import tariffs for the COVID-19 response has ended alongside the expiration of the Bayanihan to Heal as One Act last Thursday. Oil companies started to charge an additional 10% tax on imported crude oil and refined petroleum goods to consumers 1 month after the Bayanihan Act was signed. This raised the pump prices to 1 peso and 60 centavos per liter. Data from the Department of Finance showed that the government was able to generate over 1 billion pesos in revenues from the temporary oil tariffs placed from May to the month of June. This amount could have been higher though, but the Bureau of Customs reported a more than 70% decline in imported oil products in the month of May from the same period a year ago. The Energy Department previously estimated nearly 7 billion pesos in revenues from the tariff hike by the end of 2020. The Energy Department is now waiting if there will be a move from Congress to extend the effectivity of the Bayanihan law. Pump prices have increased in the past month, primarily due to the rebalancing of supply and demand in the global market. Local oil companies have yet to report fuel price adjustments for the week. Budgetary support for government-owned and controlled corporations rose above 465% year-on-year in the month of May. That's after the release of the second tranche of the wage subsidy program. The Treasury said the national government released almost 30 billion pesos worth of subsidies for state firms last month. 84% of this went to the SSS, which is the main implementing agency to provide aid to employees of small businesses. The agency also received 25.5 billion pesos from the government in the month of April. The wage subsidy program seeks to help small business owners pay their workforces during the first 2 months of the lockdown by providing around 5,000 to 8,000 pesos per month to the employees. State-owned firms that did not receive subsidies last month were the National Electrification Administration, the Intercontinental Broadcasting Corporation, and the Small Business Corp. The Cavite government provided a 90-day extension for Lucio Tan's Macro Asia and its Chinese partner to submit documentary requirements to post-qualify their bid for the $10 billion Sangli Airport. Cavite's PPP Selection Committee confirmed this to Businessworld over the weekend. The committee noted that the consortium made a partial submission on June 15, but requested an extension in light of the COVID-19 pandemic. Cavite Governor John Vic Remulla earlier said that the province was hoping to break ground for the first phase of the airport project by the second quarter. This phase is expected to cost $4 billion, and it includes the construction of the Sangli Connector Road and Bridge, connecting the airport to the Kawit segment of the Manila-Cavite Expressway. Cavite expects the airport to start full operations by the year 2023, with partial operations to start in 2022. It's safe to say markets were shocked by the BSP's 50 basis point rate cut last week, but the excitement is clearly over as the bleaker reality sinks in. What should we be tracking to gauge whether a real recovery is underway? Here to share with us his views, we have Regina Capital's Alvin Limlingan. Hi, Alvin, and welcome to the broadcast.
Hi, Dani. Happy to be here.
Alvin, let's kick off with broad and just COVID-19 related, because we've been ignoring that for a while as restrictions were lifted again, and we were all excited that the economy was going to get back on its feet. But the reality is 10 million cases, 500,000 deaths, record infections. We've barely even opened our economy. What's your sentiment now? May hope pa ba to get back to normal and back to our feet this year?
I think the daily reports on cases speak for themselves. No, as much as we've all would like it to go down, apparently it's been edging up. There was even a WHO statement saying that we're one of the highest, and this sentiment was recognized by Senate President Tito Soto. So it's obviously a big point of concern, and it casts a very heavy shadow on the markets. And it will do so for the foreseeable future.
Okay, so what are analysts feeling about another lockdown possible? Are you already pricing this in? Or other countries, for example, despite the resurgence in cases, have not reimposed the restrictions, like in the United States, for instance. Do you feel that this is going to be another risk that we have not yet priced in, or are we actually already pricing in or bracing for the worst?
Well, the prevailing mood among analysts, not just here but in the United States, is the economic consequences of another lockdown would be so severe that
Mm-hmm.
it's not on the cards. Of course, we're not privy to what the IATF is thinking at this point. The prevailing mood is that since cases are going up, you might have more localized lockdowns, maybe more targeted areas, specific barangays. But a nationwide lockdown does not, well, at least it's not yet been priced to be on the cards. But having said
Okay.
that, the cases speak for themselves. So obviously, economic activity will decline further.
So are you saying that the markets are actually still more positive or optimistic than could be? There's still much more downside risks rather than upside risks.
I would say more of sober. I mean, no one wants this. We all wish it would go away. We're all hoping for vaccine, no? But I guess you just have to live with the fact that this is going to be with us for a long time, and companies will simply have to adjust.
Okay, let's talk about the BSP surprise rate cut. I mean, you can
Yeah.
see on my terminal here, my producers are going to bring it out for you, but we're again approaching that, scary cross wherein the real interest rates might turn into negative. And we were actually lauded for being one of the economies that still had the monetary space, diba? I mean,
Yeah.
other countries are negative na. So ito na yung last possible, ammunition that we have. Are you feeling that this will actually be enough to prevent an economic downfall, and will our contraction be capped at the rates that the government is actually saying?
Well, okay. First of all, I applaud the central bank. They're doing everything they can within their power uh, to help the economy. But as they say, the central bank can lend, but it cannot spend. So to the extent that monetary policy can be deployed, the central bank has done its job. Now it's up to our leaders in Congress to supplement this with the fiscal side. Monetary policy alone is not sufficient to bring us out of a recession.
Mm-hmm.
Uh, yes, it's really significant that the central bank cut overnight lending rates by 50 basis points. But if you're someone with a credit card and you're paying 36% a year, and for the sake of argument, they lower it to 35.5, that's not really going to move the needle so much. If you're someone with a resort in Palawan and
Okay.
you have no guests because there are no flights, borrowing at cheaper rates, even assuming you can get it, which you probably can, won't really
Okay.
move the needle much. No. So now the onus is on the fiscal side of the government to get going. No?
And is that fiscal side getting going? I mean, may fiscal space pa ba? And saan kukunin? So we had just reported on the oil tariffs, and they collected 1 billion because not so many people were using the oil anyway. And if they're very keen on keeping our credit rating. Then they don't want to default on the interest rates, but it's also, a risk of them taxing people even further, or actually cutting some infrastructure projects which we need to get the economy back on the ground. Where will this fiscal space be coming from, and will this be deployed fast enough?
Well, unfortunately, we have certain restrictions in law. Now, I think Secretary Dominguez said there is a provision that doesn't allow them for further spending. So it looks like at least this year, we might see a stimulus between 180 to 300 billion pesos. That's
Mhm.
much less than ideal, uh, but there are laws in place which can't easily be overrun. I guess the most important point to make is it's only the government that can really take advantage of these low rates. The banks are awash with cash and they want to lend, but only to a certain point. If they think you're a bad credit risk, they're not gonna risk lending to you an amount which would cost them, the entire loan just for 50 basis points more in income.
Mm.
So it's only the government that's in a position to do so. And yes, you have the fiscal side which is constrained, but there are other measures you can look at. Government guarantees,
Okay.
uh, PPP projects, because it's really just the government that can take advantage of. I mean, not only, but it's in the best position to take advantage of these low rates.
Okay, so it's not actually going to feed into the consumer space. Now, speaking of lower rates and how that affects the banking sector, what's your sentiment on the banks right now? Because the BSP has been very clear that it has enough cushions. They've done stress tests, but at the same time, like you mentioned, there might be a squeezing of margins if the interest rates are now very low, plus the fact that there might be defaults on the horizon from large corporates not able to pay back those higher interest rates that we had seen last year, or the years prior.
That's something we're watching very, very carefully, though. If there is a significant uptake in non-performing loans, this will constrains the bank's ability to lend. So it's something we watch very carefully. We don't think it'll be as big a problem as it was during the Asian financial crisis. Our banks are better capitalized, and the consumer still seems to be resilient at this point. And I'd like to think many of the more riskier loans have been moved to fintech players and non-traditional players. So maybe
Wow.
they'll be harder hit. But the banks, a lot of them are. I mean, most if you look at the loans, the banking system, a good portion is secured by real estate. A good portion are made to blue chips. Uh,
Okay.
Consumer loans are relatively. I mean, moderate. I mean, it's something that the banking system now can handle.
Okay, are you saying that there are more risks if the bank is more exposed to retail loans right
Oh,
now?
definitely.
Okay, rather
Uh,
than corporate.
yeah, definitely. In fact, there were some rumors about some banks that would have been acquired the last few weeks. And
Correct.
the cited reason was high exposure to consumer loans, because
Mm.
the consumer is relatively the most vulnerable part here. If they lose their job, there's not much they can do to pay off the loan. These loans are unsecured, so it's the most sensitive part of the portfolio.
Okay, let's talk about property space, Alvin. Is this a good buy to be? It's in theory it's supposed to be a safe haven. Property stocks are a long term play, and
Mhm.
now that prices are significantly lower, but then they were also at all time highs. For at least the big players, SM Prime, etc. Is this actually a good time to be buying in, or will the prices be fundamentally, repriced, let's say, going forward? And did all of this high prices in the property space, was this linked to issues like POGOs having uh, uh, temporarily or not fundamentally increased it, or is there actually still some room for some upside?
Yeah, that's a really good question. No? First of all, I guess we should distinguish between property prices and the stocks of
Stock
property
prices, yes.
companies. No? So let's look at property prices first because this will be reflected in the equity prices of property companies later on. Uh, yeah, this is something also that we're watching intently. No? Unfortunately, information here is sporadic, and I think the last 3 months have not been representative of what's going to happen because people are constrained from transacting. I mean, it's
Mm.
simply impossible for people. It was impossible for people to go out and take a look at the property. You're not going to buy a multi-million peso property from a Zoom conversation.
Okay,
So
okay.
there's been a dearth of transactions, and it's hard to get a good sense of where it's going. But we have some anecdotal evidence of what's coming up. Pogo seems to okay. We're getting conflicting news on Pogo. On one
Mm.
hand, we're hearing this your article later being the latest that Pogo seems to be moving offshore. Uh,
Correct.
Others
Exiting.
are
Mm.
saying it's moving to the provinces, but not necessarily offshore. So
Mm.
you see a lack of demand in the major urban centers where many of the property companies are strong. So that would, indicate slight weakening there. However, at the same time, interest rates are very low. And for those that have taken property loans out, uh, their payments will go down. They might not qualify for a loan in the future, but those with existing loans will get some relief with the cut in rates. So
Okay.
these people will try and hold on for as long as they can. Maybe tenants, maybe they'll accept uh, l- lower rentals, but they'll try and hold on for as long as they can, and um, so you won't really see that shakeout till a while. So if there will be a shakeout, I think it will be in 5 or 6 months. By that time, there'll be a capitulation. People with properties might start letting go of them or disposing of them at market clearing prices. But as things stand now, people are just holding on and hoping things rebound soon.
Very last quick question on Altos. Just since we're on the property space, what happened there? I mean, some are saying that some strategists are saying that there's property assets from Robinson's Land, JG Summit that could be injected here, despite the fact that their revenues last year were rather low, 64.5 million pesos lang, diba? But there was so much excitement on the stock last week. Tell us what's going on here, and is this actually something that people are expecting to be the next REIT?
Uh, okay. Well, first of all, it was realistic by introduction. So there was,
Right.
unlike let's say Mary Bart, where shares were offered to the public. This one, the 16 shareholders of Robinsons received shares. So the point there is, it's a very thin market. No? There are lots of
Mm.
people who receive shares, may not even be aware of it. So the amount of supply is very constrained as opposed to let's say an IPO where where a lot of people took
You
on
could have,
shares
yeah,
and plan to
correct.
actively trade it. So it's an aberration in that part, and you should take that into consideration
Mm.
when you look at the rapid stock price. And I think the um, appreciation is relative also to the offer price. There's a different set of rules for listing by introduction. After all, there's no net capital raise going to the sponsor, so there's a
Mm-hmm.
less of an incentive to offer it at a richer premium because there's nothing you
Okay.
will stand to gain. So you shouldn't look at it like you would a regular IPO. As to whether this will be for a REIT, we haven't really heard
Mm.
disclosures to that effect. Uh, I think at this time people are just waiting and seeing, and I'm not sure if that's the correct sequence for to sponsor a REIT. No.
Okay, so very interesting points there. Just a very quick check on AppV. That is trading up, ceiling again this
Yeah.
morning, up 50%. It's now trading at 27 pesos and 75 centavos. Thank you so much for those insights, Alvin Limlingan of Regina Capital.
Thank you. My pleasure.
And guys, that's a first look into this business day. Today is June 29, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Dani Laurel, and we are One News.